Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Marketfy. I'm your co-host Joel Elconin, along with Dennis Dick, and we have Nic Chahine on the line. He's the author of Create Income with Option Spreads. He joins us every Tuesday morning. Nick, how was the long 3-day weekend?
Well, for me, health-wise, wasn't very good. I spent part of it in the hospital, but
Oh no.
I got hit by a nasty flu strain of sorts. So now a lot better. But a couple days ago, I was hurting bad.
Oh, sorry to
Oh,
hear that.
that's
No problem. Better, much better today. So I'm all up for it. So let's hit it.
where are you at, Nick? Where are you physically like
Southern
looking?
California, where it's
Southern
freezing at
California.
75 degrees.
It's freezing at 75 degrees, and we're hovering around like minus 10 or something in Detroit here this morning. It's just absolutely ridiculously cold up here. Nick, you want to talk a little bit about American Express? We were talking about it earlier on the show, and this thing has just been annihilated since they lost the deal with the exclusive with Costco there. What's your thoughts here on American Express?
When it first came down, I zoomed out to 2 years, and I'll try to share a chart with everybody there.
For sure.
Um, I thought that yes, it's an overreaction because it's Costco, and who knows how much of its income is it.
Yeah, that's what we were talking. Yeah.
They do have about, I think, I went to Costco. I kind of tried to get some information from the clerks there, and they mentioned like 75 million members or something. So it's quite a bit of people that use it, me included. So, and I prefer to use American Express as well. But then I said it was too early to jump in because of this bigger move needs respect, and let's wait
Yes.
for another candle. And sure enough, the second candle. And I said I still haven't heard any downgrades or anything like that. And everybody's going to jump on board and start to downgrade it. So it's like there's going to be plenty of time to catch this knife. And I've identified a couple of areas, a couple of
Okay.
boxes. The one box was around the 90, 87.50 to 90, where it zigzagged up and down, up and down, up and down. And then
Yeah.
the other one, about almost 2 years ago, between 77 and a half and 70. And that's where they may be going with it. So I'm not going to try to catch it until it tries to touch 75.
So you think we may be at three, four more dollars of downside here
I'm going to give
potentially?
it room. I want to
Yeah.
catch this knife, but I think there's be plenty of time to catch it because it's going to, like you said, maybe for a trade bounce, maybe, but
Yeah.
eventually that's maybe where they're going. I'm not certain. So, but I'll give it more room.
So I was looking at this one here, and I just want to get your longer term perspective on it because I was looking at it from a trade bounce, but I'm also looking at this as this swing went down maybe into the lower 70s where you're talking as a possible investment. Do you like American Express still as a story, like as a long term investment?
I just can't imagine that it's broken based on one store.
Yeah.
You know what I mean? It's a global
Yeah.
company. How could that be?
Yeah.
It's one of those common sense. Here's the American Express without today's candle or most recent candle.
Okay. Yeah.
You
Nick
see
just
the
posted in the
boxes I'm
chat.
talking about.
Okay.
It can't be a company this global, this powerful to just be hit this badly from one store. I mean, it's Costco, yes, but it's one store.
So you're looking at 70, 72, 73. So $4 or $5 lower than this. If this thing got down there, it'd probably find maybe some support there because of all that area that it had. Looking back, I guess you're going back in August of last year where you really had a lot of support there. Actually, you're going back 2 years ago, right?
Yeah, this is a 2 year chart. So it
Yeah.
looks like
Yeah.
there was a transition period that had it escalate from this area to the upper area where it played for a good bit of part of 1 year. But it doesn't matter. It's where they're willing to buy it and sell it. So markets have habits and they may fall into that habit again. So I say there is time to catch it, but I'd like to catch it when it does. So
Okay, Nick, just want to move on here to Priceline. I know you like to follow this, rapidly moving stock. Now, you had the deal last week with Orbitz Worldwide getting acquired by Expedia, and boy, they seem to just love the sector on that, and really hasn't given you much move here, much chance to get in between 1,000 and 1,100 here. Give us your take on Priceline.
it almost never gives you this is a beast as far as moves up and down. As a company, I like it because they do business everywhere and they seem to be diversified. However, we marry them with Europe for some reason, and I was waiting for it to pop big time when the Eurozone came out with their QE, and it kind of was a delayed reaction. But yet last week it stopped. If you connect all the highs, there were lower highs from say August of 2014. It had one peak, and you connect it to another peak down at 11 of 2014, and another peak. at 12:30, 2014, and this recent peak, they all line up properly, meaning it's at a point where it's going to break out or revert to the lower end of that descending channel it has. So given that it's got earnings now, the coin flip becomes really a coin flip. So I don't play earnings full boat, meaning I just participate via lottery tickets, small positions that just make me participate and benefit. But I don't believe in earning plays with full money because it is a really a coin flip, regardless of what I keep saying this, but regardless of what they actually deliver in profits, or lack thereof, because you never know how the people are going to react, how the traders are going to react to actual numbers and statements. So I'd rather play it after the fact, and there'll be plenty of premiums to do so after the fact.
I'm just looking here at the straddle on this thing on Friday. It looks like the 11:05 closed at $52.
Yeah,
So
well,
fifty
it's
dollars of
it's quite a
fifty
gamble.
dollars here.
It's quite a
Yeah.
gamble.
So do
So
you think it's
here's
got?
here,
It seems like it does move 50 points on these earnings
well,
reports, doesn't it?
yeah, I mean, it moves it moved $100 last earnings in one day, so
Yeah.
down. So yes, it could do it, but what are the it's just a lot of money to gamble on a coin
Yeah.
flip. You know,
Yeah.
I'm not a gambler. I don't like to gamble my money away. I'd like to put educated guesses on here. There's no educated guess. They're either going to buy it or sell it, and who tells you more than the other? So there's no reason for it. So if you think you can gauge the move, then maybe you can do some sort of a clever tricks with the earnings. Kind of like if you want to do a debit spread and then go out further away from the money and do an equal credit spread to kind of hedge your bet a little bit, so lower your entry cost, then you're kind of threading the needle. You want the price to fall or rise to through the debit spread but not reach the credit spread, kind of like spread the spreads. I've done that last week and it was okay. It's stressful for people who are not used to it, but there's no extra risk other than the cost of the outlay of the trade itself because they're of the same size. So it's probably one way that one would play it, but really just a small bet to make you participate and not make you too upset if you lose it, but double your money if you're right. So the question is, do I buy a spread at the money or far away from the money? I like to do it at the money because I only have to guess the direction. I don't have to guess how far out.
Nick, last week I saw an email that you were gonna try and pick a top in Apple, but you weren't gonna give it. You weren't gonna give it a lot of
Uh,
room on this one. Could you just give us the philosophy behind the trade, how you managed by potentially the losing trade?
Well, that's true. And Apple, I say they need a flying car. I think the flying car is here, and I mentioned it before. It's Apple Pay. I think it's gaining legs. I think it could be a game changer for them going forward. The way the commercials are coming across, the way how people are talking about it, it might be the flying car, kind of like the next iTunes that nobody talks about, but it'll be a cash cow for the company and a game changer for the industry. So I did buy some puts in Apple last week, and they are probably 10, 15% down through this week, probably. Depends on where Apple opens today and holds. I'll give it another day and I'll bail. I'll just close them for a loss, and I'll say, you know what, I tried. I didn't. It didn't work. I'm not going to go long it, but I'm also not shorting it via credit spreads because that would be just suicide. And quite frankly, I don't know why we bounced this morning on bad news from Greece. I thought the Greek talks fell apart. So what the heck are we bouncing on?
We were talking that Greece is always good news for the markets because when there's bad news, they shrug it off. And when there's good news, they rally the hell out of it. So
Yeah, well,
either way, it seems like it's good news for the market when they talk about Greece.
last week we celebrated the Greek deal and the peace talks
Oh, yeah.
four times.
Oh yeah, oh yeah. We just keep celebrating the same thing. So this is just this yo-yo. Well, it's a yo-yo talks, but the market continues to go higher on it because, like we said, if they sell it off, quick 1% or 10,
Yeah.
12 S&P points, they come back buy it right away. But if they rally at 12 S&P points, they keep rallying it.
Right. And the ECB is going to have to fold or accept the fact that Greece is going to tell them to take a hike because they owe them so much money. They kind of drive the bus. I used that. I used to use that argument during the financial debacle here, where people were walking away from their banks. It was like the banks not wanting to renegotiate loans are stupid because the people owe them so much money. They're going to say, you know what, as a collective, we're out of here. You keep holding the bag. I'll have a ruined credit for a while, but at least I'm out of the hole. I'm not going to spend my lifetime being under your thumb, kind of a deal. So Greece might tell them that.
Uh,
And if they do, then who's next, kind of a deal. So it's a big deal that the Greek talks not fail and that they come to some sort of a term. But apparently the markets have blinders on. And here's something about the markets, but if you, excuse me, if you pull up a monthly chart of the NDX for 20 years, Friday's close was higher than the highest monthly close ever, including the dot-com bubble. Nobody talks about that. The monthly candle close from 20 years ago during the dot-com bubble was lower than Friday's close in the NDX.
Hmm.
Yeah, the high was about 400 points away or 300, whatever it was, but that happened after. If you look at it, it means we traveled far up and then far down really quickly that month, and then debacle from there.
Nick,
I'm
I
not
just,
saying
I,
I'm not saying the same thing is going to happen, but I'm saying that's a milestone that needs to be talked about.
Nick, I just want to touch on a few other issues before we just go to general market talk. Alibaba got off the mat yesterday here, or at the end of last week. Traded down here in the pre-market just a little bit on some decent volume. I know you were taking a couple stabs at this one. Anything long term that you're looking at here in Alibaba?
Alibaba, I like it long term. I always said from the beginning, unless they're lying, this story has legs, and it's here. I mean, they crank money, and then the talks of some fraud issues or whatever. So that was my sticky point, right? But I still like it long term. I think the problem is culture talk, like what Jack Ma was trying to do on Friday. I think trying to tell them. He was trying to represent the company as a humble company, even though they have billions now after they went IPO. And the fact that he's not paying his employees, he shouldn't have said that. He should have said they don't deserve it. Excuse me. Pardon me. They don't deserve it, kind of a deal, but in a different way. So I think it's them not talking the right language. The first time we heard him, he was so well received. He was humble. And then they went public. And the second time we talked to them, he was like a different man. And then his representative, when talked a couple of weeks ago, within the last 2 weeks, he didn't sound as humble. All they needed to say is like, okay, we did well, but we think there's a lot of room of improvement. We kind of not did very well here. All they needed to do is just fess up that there's room for improvement, and then the market would have received it a little better. But
Okay.
there is lockup coming up, so that might be depressing the stock. But long term, I don't mind buying calls and holding them for long term leaps.
And Nick, I didn't get to talk to you last week, and we haven't really talked about Twitter as of late. And boy, got a nice boost off earnings here. Seems to be consolidating here. Did the people miss the boat to try and buy this thing in 40 or even in the mid 45s here? Or do you think it's going to give a little back before it makes a next run higher?
I booked my profits, and I'll wait for the next time they hate it, and I'll buy it. Until then, I'm out because if the market's correct or if the markets drop, Twitter will not stay up here, just like any other stock. And that goes for Apple too, by the way.
Okay.
So right now, the markets are in la la land, and they're happy, happy, happy buying everything. And Twitter had a good story, and I know it was a good story, so we jumped on board early on this one. But I booked the profits. I mean, how much greedier can you get? And short term, and I'll wait for another entry point. And last 3 days, there were good, strong days for it. I'll wait. There's a big gap below it. I want to see maybe if we had a hiccup in the market, maybe to try to fill that gap. And I think we may have a chance at it lower if the markets comply.
Okay, and just final on the S&Ps here. I know you like to play the outer boundaries here, and we're starting to reach the that $2,100 level. You talked about it before. Is that still a line of defense on the upside?
Well, it is a, battle zone. In fact, there's one at 2075 that it's still looming. But the 2100 and the 2125 and the 2075 are 3 points of contention. So, believe it or not, the high point of interest is still much lower than that. But that doesn't mean that's where we're going. That means that where the battles were before, and some people have not let go of those areas. So if we have a big conniption in the markets, I would not be surprised to see 2050 again. In fact, for March, I would venture to guess there'll be a 1.9 in the SPX future on the
Oh,
left side.
all right. We'll be looking for that. Nic Chahine, author of Create Income with Option Spread, Marketfy Maven, joins us every Tuesday. Give us his outlook on the markets. Nick, thanks a lot. A pleasure as always. We'll talk to you again next week.
Thank you, guys.
Thanks, Nick.